From the morning reading, IWM, spiders, diamonds bounced, Qs lower on Microsoft, Google, Amazon, Facebook, and Gilead after hours. Apple miss on falling iPhone sales. 6 of 9 sectors moved higher on Tuesday. XLE, XLI, and XLB were the strongest sectors, while XLK was the weakest sector. Oil futures rose $1.67 to close at 44.67, its highest close since November the 5th, 2015. Breadth strengthened as advancers led 3.37 to 1 on the New York Stock Exchange and 1.7 to 1 on the NASDAQ. Investors keep showing greedy behavior. The CNN Fear and Greed Index has been in greed territory consistently for weeks. Our proxy index is showing its highest 30-day average in 4 years, which has tended to precede subpar returns in stocks even after signals that triggered when investors had recently been showing fear. The VIX has been low for more than a month. In its history, the fear gauge has spent 1/3 of its time below 16.5. But to stay under that level for 30 straight days is relatively unusual. When it has done so in the past, stocks struggled over the next couple weeks but consistently showed modest gains over the medium to long term. On Tuesday, more than 75% of issues on the New York Stock Exchange advanced, but the S&P 500 gained less than 0.25%. That has never happened before, dating to at least 1962. Something similar occurred on Friday with extremely positive breadth despite the major stock indices barely moving. This reflects a lot of positive moves in small cap stocks and beaten up minor sectors. As noted on Friday, this type of activity has tended to lead to modest outperformance going forward, but it's tough to be confident in that conclusion when we're seeing never happened before kind of activity. Bad earnings reactions are pushing NASDAQ indices to losses after hours. The NASDAQ 100 Trust QQQ has gapped down 0.5% or more on a day the FOMC announced its decision on interest rate 13 times. The S&P 500, the SPY, also gapped down at the open all 13 times. Buying the open and holding for 2 days led to positive returns 11 of 13 times, averaging 1.2%, so the tendency was for a short-term rebound. Most of these gains were then erased in the days following, however. Hello, this is Stephen Harris, the head trader from Falcon Global, where we model best practices for investors, traders, day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:26 a.m. Central Time, and I'm recording this in preparation for the market day of April the 27th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. We're a little late running this morning, and there was a good reason for it. I found an error in one of my data sources, and indeed, just a quick aside here, this is the daily price guide for the 4 futures markets. Here's your S&P, your Russell, your NASDAQ, and your Dow. And you see there's a lot of information packed in here, and this comes from a whole multitude of different data sources and how I build this. Well, as members or subscribers to the daily price guides, if you ever see something that looks askew, please feel free to send me a heads up. I am always happy to double check those data sources. I do find every now and then, and indeed the last 2 days in a row, this particular data source has had errors in their information that they're outputting. So it's a very, very powerful tool to have this if you're an active trader, whether you're a day trader or you're an active investor trader who likes to time your entries and exits. Being able to know where all those support and resistance areas are for your market that you are charting is a very, very helpful thing. This subscription for actually 8 of the futures markets also comes with not just the 4 indices, but also gold, euro, bonds, 8 markets altogether. It's only $25 a month to get that delivered to your email each morning. But anyhow, that pushed me a little late this morning, so we're going to press on and move with some effort here. In terms of the overnights with our 4 U.S. broad market indices are all down, but just very little. In fact, the S&P and the Dow are down about 0.25% at the time of this cut. NASDAQ down a bit more with some of those earnings releases down over 1%. Russell's down just below scratch. The crude oil is up about 1.9%. Euro is up just over scratch. Bonds up about 0.25%, and gold up about 0.33%. Overseas action's a bit mixed, with China and Hong Kong both down about 0.25 to 0.33%. Japan down about 0.33% as well. So all the Asians are down in a similar fashion. Germany up about 0.33%. United Kingdom down about 0.25%. In terms of macroeconomic reports for today, the primary thing coming out today is this FOMC statement this afternoon. Along with that, the Fed funds rate. No surprises are expected there. So if they did surprise, that would really shake up the market. So kind of be always aware of that potential. It's a red flag report with great cause. Crude oil inventories also after the market opens this morning. And let's see what else we've got here. And looking forward to tomorrow for the U.S., you've got advanced GDP, the weekly unemployment claims, nat gas storage, and that should about take care of it. In terms of current volatility conditions, you have short-term VIX at 13.5, skewed just barely elevated. IV percentiles very, very low. On the S&P at 10, Russell 9, NASDAQ 14, and Dow an 8. We did have a standard deviation move put in by the Russell yesterday, up by more than one standard deviation move. In terms of the charts, let's go ahead and bounce over here. We'll start with the S&P charts. And you see the action in the last couple days has been decidedly, nondescript. You could argue that we've got a little bit of a bull flag or perhaps a bit of a pennant pattern going on here. Obviously, probably waiting for the FOMC announcement to be able to make any kind of real decision. Often goes kind of sideways and indecisive in front of those kinds of announcements. In terms of the Dow, very much the same pattern. And Q has the weakness. This is being driven by some major earnings reports with big misses. So be aware of that. And then the Russell's actually kind of probing up, though nothing in terms of a real breakout, but continues to just kind of probe ever so gently up each of these days in the recent past. So a little bit of difference performance going on by the Russell versus the NASDAQ, and then both of those seem to be a little bit on their own courses compared to the S&P and Dow. In terms of current volatility conditions, relatively low, really not much action there. Bonds also have been ebbing down, which would seem to say that we should expect that equities would move higher. And then we'll take a quick look at gold. Gold, this has been a pretty difficult mess. We did have this breakout, but then it settled again. We probably could redraw this at this point into something of a triangle. Like that. And if this indeed is going to be setting up as a triangle, and it's a little bit of a messy one, it's not perfect across the upper section here, but if it is a triangle, you see we're coming into the apex. So normally you don't get all the way into the apex. The other aspect to this is if it doesn't break through the apex, then we probably redraw this formation into something of a sideways rectangle or consolidation pattern. Right now, triangle seems to be the best chart pattern. If it is a triangle, we should see a breakout probably to the long side in the next few days. It's starting to run out of time to break out, so the energy should be breaking on that. Momentum should be breaking to take us out. We'll take a quick look at GLD, the ETF, and you see it's much harder to draw the chart pattern on that. That's one of the reasons why we almost always use the futures charts to get a better picture of what the professionals are doing. Okay, that's enough on that. Let's go ahead and go to the daily report. And there were a couple changes here today. In terms of our market timing signals, we have 3 that we follow. The first one is giving us a caution. The IBD's uptrend under pressure is their signal, though accumulation distribution scores continue to remain as a NASDAQ B minus, S&P B. GMI index, no change here. 5 out of 6 on the primary signal. The more sensitive signal is a 3 out of 8. So something of a little bit of a warning there. Decision points, we did have a change here. In fact, we've had continued deterioration on our short term, and you notice we've got 2 new signals here, one outright bearish, one going to neutral. So short term has started to turn decidedly to the bearish side. That matched up with a very mixed long term. This is a very ugly kind of setup. And not much of a stack. In terms of position sizing opinions, no change from yesterday. 50% on the position sizing for portfolio, and on the active trader using volatility, 75 to 100%. Intermediate term market posture, these numbers have been falling, but they're still in the upper area, up over 80. So all still very strongly bullish on the intermediate term time frame, and that's also supported by a strongly bullish sentiment line, though it is now in the upper reversal zone. So we start to watch for signs that that may be switching. Strength of trend continues to be very strong, up over 80. Hedge warning status is also still at level 1, which is our level, first level of caution. And there's a number of reasons for that. And from yesterday, we still have several specific warnings. Volatility ratio warning still in the reversal zone. Distribution day count still is relatively high at 6 for the NASDAQ, 5 for the S&P. Skew just over the threshold, about a 9% probability of a 2 standard deviation move in the next 30 days. Sentiment is the primary area where most of the warnings are coming from. You see on stocks, both short-term and medium-term, on a scale 1 to 10, we're a bit elevated. So we start to look for signs of potential reversal. Also, the same thing with these ETFs. They're also elevated sentiment, so watch for those reversal signs if you're in any of those markets. Fear and greed index, one of our morning authors made mention of this, that we've been up in this greed zone for several weeks now, and indeed with yesterday's close we're still at a 71. No changes here. On terms of the sector specific, you can see the consumer staples, utilities, technology, those more defensive areas, those areas where you see a lot of dividend payers, they're the ones that are underperforming at the moment. We'll continue to watch that. There's been some interesting sector rotation going on of late. You know, you see the performers of yesterday: energy, materials, industrials, financials. Those are all your higher beta areas, and if you're going to have a good strong bull market, that's where you're going to find high performance. So continue to see that move along. So we're a little late in the morning, so we're going to go ahead and wrap this up at this point. So I'm going to just scroll through this. If you see something of interest, go ahead and just hit the pause button and go to that hyperlink to gain additional information. Disclaimers as always, hit the pause button if you need more time to review, and then of course note the full hyperlink here down at the bottom for the full set of disclosures. We'll see you back here tomorrow morning with the Falcon Global Market Preview. Good trading, everybody.